just on a short-term basis, again, I'm someone who thinks Bitcoin eventually is going to head lower. I think sub 20,000 is likely, but just in the near term, I do expect a bounce maybe back into the low 40s.
So far, the performance of Bitcoin and other major cryptocurrencies is far below what investors expected for this point of the cycle. Even after the events of late 2021, many leading analysts predicted that things would gradually be getting back on track by this time of the year. However, Bitcoin has lost around 31% of its price since the beginning of the year, wiping out over $200 billion in value. Ethereum and other top altcoins have also not fared better. Amidst all the questions and fear, two leading figures in the space recently had an interactive session with Kitco News. They are Lyn Alden, founder of Lyn Alden Investment Strategy, and Gareth Soloway, chief market strategist of InTheMoneyStocks.com. While both have similar thoughts on certain issues regarding the crypto ecosystem, they also have different opinions on other subjects. One of such topics that they agree on is that the crypto ecosystem is not quite where it should be right now. While Alden believes the problem is generally weaker demand, Soloway believes an 8 to 5% dropdown will get things back on track. Welcome to Savvy Finance. This video examines Lyn Alden and Gareth Soloway's thoughts on the current market situation. They discuss the reason for the recent crash, their short and long-term price predictions for Bitcoin in 2022, and whether the Bitcoin hash rate might be the answer to some of the questions we all have. If you are interested in all this and more, ensure you watch the video to the end, give it a thumbs up, and subscribe to the channel. Enjoy the video. Lyn Alden is a macroeconomist and founder of Lyn Alden Investment Strategy, who previously stated that Bitcoin should be in a bullish market right now. With the past week's events, her opinion has changed slightly as she now sees the market between bullish and neutral. On the other hand, Gareth Soloway strongly believes Bitcoin is heading for 20,000 or even lower within the next 12 months. In the recent interview, he explains that Bitcoin has had various 80–85% drawdowns in past cycles, and he expects a similar thing to happen now. However, Alden points out that we have not seen a blow-off top in this cycle, so there is a possibility that the dip will not be as pronounced as what we had in the past. When asked why they think the market has taken this turn in 2022, Lyn Alden explains that past Bitcoin rallies and crashes have coincided with rising and declining economic situations in the United States, which might explain the recent dip. Soloway believes Bitcoin is following a pattern it has always followed in the past, a blow-off top, followed by a crash until it bottoms out, then sideways chopping before it gets back on track. According to the technical trader, Bitcoin could go lower than 20,000 before it gets back into the $40,000 range in the short term. Listen to Soloway and Alden's observations on the current market situation.
So in general, Bitcoin is showing risk-off behavior, kind of an early sign for the market. So it started to show weakness before the other indices. And my base case is I thought this rally probably had more legs to it, that it would stabilize a little bit better, but we've seen that that's not really been the case. And we started to get that confirmed in economic data. So for example, if you look at the past 4 major rallies in Bitcoin, so 2011, 2013, 2017, and 2020, it's coincided with rising PMIs in the United States, purchasing managers indices, basically economic expansion and acceleration. And it's generally had its bear markets coinciding with periods of economic weakness. And so as we enter 2022, the problem is that PMIs are kind of rolling over. And so we don't have a gigantic sample size to work with. It can potentially decouple from other assets, but in practice, it's been a risk-on asset more often than a risk-off asset. And so I think it's somewhat challenged here, along with other risk assets. It's kind of been correlated to like the either large cap tech stocks and particularly the ARK style kind of unprofitable growth stocks. They peaked back in February of last year, and although Bitcoin's it's given better 2-year returns than those ARK stocks, it's still generally had a similar shape to a lot of them. And so it's been under pressure, I think, for similar reasons.
Yeah, so I agree with Lyn. I mean, what's interesting about it is there's a couple coordinated things. For instance, 2017, we saw Bitcoin top out about a couple months before the stock market. We've seen that again here. In addition, you could see how the decline that started from that 69,000 was really leading a lot of these, like Lyn mentioned, the ARK style, C Limited and some of these other plays, Cloudflare, they've all collapsed now. I actually think that based on just the other day, in fact, yesterday, I called a short-term bottom in Bitcoin based off a major kind of technical retrace. So just one of the little tidbits I'd love to just throw out there to investors is, if you look at the April high to the low that hit in June before we ran up to 69,000, so the 65,000 high to the 29,000 low, the exact that distance, that dollar amount that it fell was just replicated as of yesterday when we went from 69,000 down to 33,000. So just on a short-term basis, again, I'm someone who thinks Bitcoin eventually is going to head lower. I think sub 20,000 is likely, but just in the near term, I do expect a bounce maybe back into the low 40s.
About a couple of months ago, you said your medium-term outlook was, well, you said that the indicators pointed to more bullish action than bearish. Are you still sticking to that view?
So after the price weakness, I think that it basically on-chain indicators are suggesting kind of neutral to bullish. Where basically they're showing signs of kind of capitulation, kind of it's in value territory relative to its generally on-chain indicators. And I think that's contrasted by the fact that the macro environment is still challenging as far as I look out through the rest of the year. And so I think it's kind of playing ping pong between those two forces. Basically, the way I described it is that demand peaked back in quarter one, right? So back when ARK stocks topped, when Bitcoin had a big local top, and basically ever since then, the demand side has been weaker. What's been holding it up is that it has a tighter supply dynamic than prior bear markets so far, meaning that the combination of basically dollar cost averagers, and you also have, say, miners holding a larger percentage of their own mining production. That's been a common trend, especially among publicly traded miners. Basically, the supply side's tighter than normal. And so the kind of way I've been describing it is kind of like dry Kinder. So the supply side's very attractive, and you could get supply squeezes, but it's really hard to have a sustained rally until you get more demand, and that's traditionally been associated with risk-on environments. Because I'm not very particularly bullish on equities this year, my base case is that Bitcoin probably chops around for a while. I don't have specific price targets, like if it'll break below the 30,000 mark or not, or if it'll go above 50,000 again this year. My overall kind of base case is intermediate term neutral. I think there's a lot of variance for what it can do, while still being structurally bullish over a multi-year period, probably coinciding with the next risk-on period.
Soloway and Gareth also agree that there is bound to be a wipeout of some altcoins to clear the junk in the space. Soloway compares this event to the dot-com bubble. However, he adds that cryptocurrencies that survive the wipeout like Amazon did the dot-com bubble will have exponential growth. Soloway might be bearish in the short term, but he is hugely bullish when it comes to Bitcoin's growth in the long term. Listen to the experts' opinions.
Yeah, so the couple things that kind of bother me is, number one, you have the stock market that's only fallen now. I mean, the Nasdaq's down 15% or so, but the S&P is not even down quite 10% as of today. And you got to think that equities, and I think Lyn mentioned this, is that you probably do have more downside. So the question is, if you see equities correlating with a certain percentage downside move on Bitcoin in a de-risking environment, does that push? I mean, we're already at 36,000. We just hit 33. It's not a stretch to think that we could flush down. And another thing that kind of bothers me is that, every cycle on Bitcoin, it's been basically an 85% drop. Now, again, cycles can change. We know that. But you have to kind of say to yourself, if that 85% drop does come in from 69,000, that brings you down to about $10,000. I'm not sure if I think it's going that low, but you have to factor that into your thought process. And lastly, I'm still in the camp that the internet bubble, the dot-coms, and I traded through this. This was my beginning years of trading. It's very similar, right? You had dot-coms that were pennies at one point, like Dogecoin, or sub pennies. They would literally go up 200, 300% a day to the point where they were multiple dollars in terms of these companies. And you got this bubble. It was a new technology, just like blockchain. There was so much hype around it. And then you had this washout. And again, Amazon at that point was $100. It went to $5. So you had this massive decline. And ultimately, we've seen Amazon rip higher, right? And it's become one of the biggest companies in the world. So longer term, I mean, years out, I think it's hugely bullish for Bitcoin and Ether and these other ones. But I still think we need to see a washout of these meme coins. I mean, there's so much junk in the space, and it's hard to imagine that washout occurring unless we get a bigger move down sub 20,000.
So I generally agree we need to see a washout of a lot of the meme coins and the altcoin space broadly, anything that doesn't really have fundamentals behind it. And I think that could take the form of time or space. So if Bitcoin corrects downward, it obviously puts a lot of pressure on those usually. But also, I mean, if Bitcoin grinds sideways, if it just becomes like a bear market for like a year where it just kind of goes sideways, a lot of those other tokens drain out value. So for example, Dogecoin peaked back really early in 2021, it's off tremendously from its highs, even as Bitcoin basically had this big choppy sideways pattern, even managed to touch slightly new highs later that year, whereas Dogecoin bled out. And so I think you could have an environment like that. I think my overall base case is I'd be somewhat surprised to see a sub 20,000 print. I don't rule it out as an option though. The one way I would describe it is that, Bitcoin's had these 85% drops in the past, but also had massive blow off tops in the past. And most of the indicators show they didn't reach the same level of exuberance in this cycle. So basically, you're measuring it from a less extreme topping point. It had more of that rolling top than a huge spike. Basically, the market I think is more mature. So I would be somewhat surprised to see a sub 20,000 print. The environment that I can imagine getting there, if I would have put on my bear hat for a second, it would basically be that the Fed's tightening, or at least talking about tightening into a declining PMI environment. And if they do so when we saw Bitcoin after the prior bear market, it started to stabilize above 6,000 after hitting 20,000. In 2018, it was stabilizing at 6,000. But when you had that late 2018, Powell like autopilot, tightening into the declining PMIs, that's when you had Bitcoin collapse to nearly 3,000, right? So, and you had massive kind of liquidations. And so I basically, I think if you have a liquidity event, if you have credit markets freeze, if you have some sort of major event like that, I could see a very illiquid Bitcoin spike down. I think barring that, I'd be somewhat surprised to see a sub 20,000 sustained level.
Another important part of the discussion is the role of Bitcoin's hash rate in price predictions. Both have been relatively dependent in the past, with a spike in hash rate almost always translating to a spike in the asset's price. However, the opposite has been the case since November 2021. Since then, the hash rate has been spiking while prices have been dipping. So the question is, has Bitcoin's hash rate become ineffective in predicting the asset's price, or is there something else in play here? One possible reason for the anomaly is that Bitcoin might be undervalued and oversold. Many parts of this interview are thought-provoking. While the data shows that demand might indeed be lower than required, as Alden suggests, it is a problem that can be solved if more institutions and countries adopt Bitcoin in 2022. However, there are rising fears of the problems associated with Bitcoin mining. Russia, the third largest Bitcoin mining country globally, wants to ban Bitcoin mining. EU regulators are calling for a proof-of-work mining ban to save renewable energy. Similar issues are also being raised in the United States. Kazakhstan, which opened its arms to Bitcoin miners after the Chinese ban of 2021, is beginning to feel a pinch in its power sector. The Asian country recently announced that it would be cutting off cryptocurrencies mining companies from its electricity supply. While these issues might have some dampening effects on the market in the short term, many top figures are working on simple solutions that would preserve the industry without necessarily putting a strain on the power supply. On January 26, Block's Jack Dorsey shared a video of a hydropowered solo device in action. Many other organizations are also working on similar projects. If all these things come into play, there is no doubt that demand will go higher and prices will follow suit. Please share your thoughts and observations in the comment section below. Also, remember to give this video a thumbs up, subscribe to the channel, and turn on post notifications for more. Thanks for watching.